Good morning and welcome to Stock Market Today. It's Thursday, September 5th, Thursday, September 12th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So major U.S. equity indexes finished higher in Wednesday's trading, near the best levels of the day. The S&P 500 was higher for the fifth day in the past six, and small caps also extended their recent outperformance. Treasuries were weaker, with the curve steepening. The dollar was stronger versus the yen and the euro. Gold finished up 30 basis points. WTI crude settled down 2.9%. As we get to the desk this morning, futures are slightly higher, up 10 basis points, but off the highs of the morning. Asian markets were mostly higher overnight, with Japan, mainland China leading. European markets were mixed. Treasuries were slightly stronger. Dollar stronger versus the yen, but down on the euro cross. Gold is up 50 basis points, and WTI crude is giving some back, down 80 basis points. Taking a look at the S&P 500 here, we've moved to within 1% of an all-time high now for the S&P 500. All-time highs up here near 3030. We closed at 3,000 yesterday, extending that move out of the August range. So support remains in the 2,900 to 2,950 zone, and that held on Tuesday. Resistance is in the area between 3,000 and the July highs. The RSI is moving higher with price, and Chaikin money flow is bullish. So that zone continues to hold, right? We've continued to hold above that zone, did so again yesterday and moved higher. RSI moving in the right direction, now above 60. Chaikin money flow is bullish. So indicators are lining up with price. Support is holding. It's actually been holding since the breakout. We're now starting to threaten resistance in that area between 3,000 and the July highs. So let's continue to focus on the market and see what's going on. But right now, all signs point to a test of those July highs. Taking a look at our market in a minute now, what are we talking about in our note today to Chaikin Analytics clients? Well, stocks rally again for a fifth day in the past six, pushing the SPY to within 1% of an all-time high. The growth to value rotation continues, and we're starting to wonder if this is the turn. It's no surprise. It shouldn't be news to anybody that for a long time, value has been a big underperformer relative to growth. And now we're starting to see sometimes that signs that could be changing. We'll continue to focus on the trends and see if evidence supports a change of the trend. But so far, so good. We'll look at an example of that a little bit later in the show. Futures are trading higher this morning, as we said. Taking a look at the power bars now for the major indices. The Dow remains skewed in favor of the bears. 6 bearish or very bearish stocks for 5 bullish or very bullish stocks after adding 76 basis points yesterday. S&P 500 tax on 60 basis points, 128 bulls to 78 bears. NASDAQ was an outperformer, a bit of a reprieve after 2 days of underperformance. 24 bullish or very bullish stocks there, 17 bearish or very bearish stocks. There's that big outperformance again by the small caps, and we have to start asking ourselves this as well. Are we seeing a turn in the relative performance of small caps? They've been massive underperformers for a long time. Is this the start of a turn? Now, 663 bulls to 289 bears tells you that from a fundamental standpoint within our model, there's potential for a continuation of this trend, but we'll watch. Obviously, we want to keep an eye on the technicals and see what's going on there. Bonds down, tech sending yields higher once again. Tech saw a reprieve, up 1.52% on the day yesterday. 14 bullish or very bullish stocks within the technology sector for only 8 bearish or very bearish stocks. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. The major indexes are mixed. Let's look at our stock of the day now. Stock of the day comes to us from a beaten down real estate sector in the near term, and we'll take a look at what that means a little bit later in the show. But retail value closed at 36.87, down 46 basis points yesterday, so an underperformer. But RVI, the ticker symbol, has a very bullish Chaikin power gauge rating due to very attractive financial metrics and very positive expert activity. Stock does have some weak technicals, however, and the earnings are middle of the road. But when we take the 20 factors, 5 in each of these categories, we come out with a very bullish rating. So we have a very bullish stock, strong trend, strong industry group. Taking a look now from the bottom up, the ribbon at the bottom of the screen shows us that that rating is bullish or very bullish, and the stock is an outperformer. So the market and the model are in agreement. Very bullish stock, outperforming the market. It's now oversold based on our indicator as it holds above a rising long-term trend line. Actually triggered one of our buy signals today, this one being an oversold buy signal. My only real concern is the near-term downtick in money flow, right? So if we wanted to take a weight of the evidence approach, if we wanted to say, retail's gotten a little bit beat up here in the near term, maybe it makes sense to look here. I can't argue with that. If we take a weight of the evidence approach, we can see that the majority of the key factors that we look at are bullish with the exception of money flow. My biggest thing is I don't love real estate levered to retail. And if you understand what's going on in the retail landscape, you can see why. But this stock's been a winner. There's no doubt about it. So let's put our biases aside and say the weight of the evidence supports a bullish view on RVI for the time being. We'll continue to monitor that money flow, though. But I could not argue with people who want exposure to real estate taking a look at a name with RVI. Look at our sector tracker now. Movement of the major sectors over the last 5 days. Energy, fins, and industrials remain at the top of the list as that rotation out of the market leaders and into the beat up areas of the market continues to play out. Energy up 5% over the past 5 days. Fins 4.5%. Industrials over 4%. Comms, discretionary materials, and tech are middle of the road. And you can see it's the defensive areas of the market that had been strong leadership that are now underperforming. Healthcare still positive, but towards the bottom of the list. Staples, Utes, and REITs, your real kind of core of the defensive trade that was really playing out near the bottom of the list, down over the past 5 days, right? Some of that has to do with rotation. Some of that has to do with a backup in yields as it relates to the bond proxies within the equity market. I'll show you an interesting bubble chart a little bit later in the show that just shows you how extended retail now is to the downside, at least in the short term. I mean, real estate, rather. Our industry in focus today, telecom services. Over the past 6 months, this subsector has underperformed the S&P 500 by 8.5%. Power bar ratio, which measures future potential, is weak. 9 bearish or very bearish stocks, 7 bullish or very bullish stocks, and it's currently ranked towards the bottom third. Number 15 of the 21 subsectors that we look at. Some of the indicative names here that you want to avoid or potentially look for bearish opportunities. Viasat, ticker VSAT, very bearish rating. Bandwidth Inc., BAND, very bearish rating. And Shenandoah, SHEN, also with a very bearish rating. If we take a look at the chart of the fund now, ETF power gauge rating is neutral for the fund, right? You've had a strong move as beaten down areas of the market have done well. Actually causes the trend to become strong as it retakes the now rising long-term trend line. But the rest of the metrics here don't really add up as far as I'm concerned, right? Still a big underperformer relative to the S&P 500. Money flow bearish, overbought here in the near term. This is still a downtrend for all intents and purposes. So XTL, I think you need to be selective there within telecom with comm services. If you're looking for ideas, you really want to skew towards the best ideas from a stock standpoint. And there's some names in there where you could potentially look for bearish opportunities. This group does not excite me right now. But hey, we could be making a turn, so we keep an open mind. But we're just not there yet, especially from a relative standpoint. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. CenturyLink announced on the 10th that they were buying a company, so investors are digesting that, and they take the stock higher by over 6% yesterday. No real news on Illumina. Now, it does have a very bearish rating. Within our model, the stock popped over 4.8% yesterday. Gap hosted an investor meeting yesterday, and for this beaten down name, I guess investors kind of heard some data points that caused them to rally the stock up 4.75% yesterday. Perigo didn't see any real news company specific for them to send the stock higher by 4.7%. Same goes with CNP, up 4.6%. Nothing company specific on that front. Take-Two on the loser side of the board. Take-Two is a bullish name that dropped nearly 5% yesterday. Nothing company specific on that one. I do see Activision trading higher in the pre-market here today. Baker Hughes GE priced a secondary yesterday. That took that stock lower by 3.9%. Didn't see anything on TSCO to send that stock lower by 3.8%. DaVita DVA caught a downgrade yesterday. Took 3% out of the stock, and FTI, nothing company specific, to amount to a 3% loss for that stock on the day. Let's take a look at the charts now. So some value funds are already making new highs. We told you earlier that the SPY and the S&P 500 were within 1% of all-time highs. But if we look at the iShares Core US Value ETF, ticker symbol IUSV, yesterday's move took it to an all-time high. S&P 500 hasn't made an all-time high yet. IUSV trading above a rising 200-day moving average. You can see like how flat this moving average has been, now starting to tick up as over the past 12 months. A lot of the major indexes, really haven't done much. But RSI is interesting here, right? Because as we were testing the 200-day moving average, RSI began to make a series of higher lows, and it is now breaking towards bullish ranges. At the same time, IUSV is breaking a downtrend relative to the S&P 500. So remember, value's been a big underperformer for a long time against the broader market, against growth. And now we're starting to see a potential shift in those relationships as IUSV breaks topside through a declining trend line, something to keep an eye on. If the market is shifting, this could be an early start to that shift. And look at the complete opposite. Now, IUSG is the iShares Core US Growth ETF. Notice that it's still consolidating. Now, it broke out of the August range, pulled back to retest, right, holding above that breakout level, but really still in a consolidation since the July highs, above a rising 200-day moving average, right? So from an absolute standpoint, this trend still looks okay, right? We're going to call this a consolidation within the context of a rising trend. RSI here, not as strong. Now, again, some higher lows for the RSI, and it's holding above 50. But again, that's a measure of absolute momentum. If we look on a relative basis, look at IUSG relative to the SPY. It goes from a steady outperformer since the lows in November and December to a breakdown. So the complete opposite of what we saw here, right? Here's value breaking a downtrend line, and now you have growth breaking below an uptrend line. Is this the start of something? We don't know. We don't know if this is going to continue. But we have to start putting the data points together and start looking for potential signs of a shift in the value versus growth theme. Starting to see signs. Continue to monitor those data points. And we've been bullish on growth, and that's been the right call. But now we're starting to see signs of a breakdown. So we'll have to reevaluate that view if the evidence supports changing that stance. Now, breadth continues to improve for the S&P 500, and that's encouraging. And that, to me, increases the odds that the market is going to test and ultimately take out the July highs. Here's the percentage of stocks trading above their respective 200-day moving averages. Strong spike to 75, now threatening July highs, which I mind you, confirmed at the price highs in July. Percentage of stocks above their 50-day moving averages also moving towards 70%. So again, on the longer term trends and the intermediate term trends from a breadth perspective, support the market, at least testing the July highs and potentially taking out those July highs. So breadth continues to improve. I'd also note that the advanced decline line for the S&P 500 traded at a new all-time high yesterday. Percentage of stocks trading above their respective 20-day moving averages also moved higher. So short-term rotation has hurt the REITs. Here what we're looking at on the x-axis is the RSI for the sector funds. Right, 14-period RSI. And on the y-axis, we're looking at the percent deviation from their 20-day moving averages. So short-term in nature. But you can see that real estate has been the most impacted, right? Pushing towards the lower left-hand corner of this chart, right? A week ago, it was up here. 2 weeks ago, it was up here. So big shift. as investors have gravitated towards energy, financials, and industrials, as we said. Utilities have also given some back. So you can see how that sector rotation has been playing out. That's going to wrap it for today. Sign up for that email. I will be back here tomorrow.